Hi everyone, this is Kathy Lien, and I want to thank everyone for joining me this morning in my FX Street News Trading webinar. It's been a while, so I'm really delighted to be on here with FX Street and sharing what I do pretty much every day, which is trade news. And what I'm going to do today is talk a little bit about how I approach news trading, as well as show you some examples of the news trades that happened over the past week and what you can anticipate in the coming week. Now, before I begin, I'm just going to activate my camera. You're not going to see much. You're just going to see my chart, but we'll get to the charts in a second. So just give me 1 second while I activate the camera. Okay, so right now you should simply be seeing my charts. I'm not going to use any PowerPoint slides. I might type a little bit into this chat box here. If you have any questions along the way, feel free to type them in and I'll get to them. And if you're wondering, this is the e-signal chart. This is what I've been using for many, many years now. There are tons and tons of charting packages out there, but this is one that I feel works best for me. So with that, let's get started and talk about news trading. Now, when it comes to trading news, there are many different ways to approach it. Most people, when they trade news, they do what I call reactive trading. And reactive trading basically means getting into a news trade after the number is released. Now, news trading is very popular because, a lot of volatility in the market is caused by news trading. But this is not what I prefer to do. What I prefer to do is something called proactive news trading. So what is, getting dyslexic this morning. What is proactive news trading about? The reason why I love proactive news trading is because it positions me ahead of economic data. So proactive news trading means to get yourself ahead of the game. What are the benefits of proactive news trading? Number one, proactive news trading has lower risk, which means that usually when you're trading news proactively in the Forex market, you're getting into the trade before the number is released. So by getting into the trade before the number is released, you're basically able to find a much clearer stop. What I mean by that is that, before a number is released, especially if it's a significant economic number, you typically see a little bit of range trading before the data comes out. So that range gives you a good level, either in terms of a swing high or swing low, to put your stop. So when I say lower risk, it means that usually there's a clear stop and there's a relatively clear range that occurs before a big release. The second benefit of proactive news trading is instant gratification, meaning that if you are right in predicting how the economic data could come out, usually your target is hit relatively quickly. If you're wrong, usually you're stopped out relatively quickly as well. So for those people who don't like to sit with the trade and nurse it for long periods of time, proactive trading may be, pretty attractive because you'll be putting in the trade shortly before the news event is released, and usually your trade will get resolved shortly thereafter. Don't worry, Teresa, we'll be going into tons and tons of examples and just kind of laying the groundwork for all of this. And number three, simply, the third benefit of proactive news trading is that if you are wrong, you are out. Meaning that if you're wrong, usually you get stepped out relatively quickly and you move on to the next trade. Now, the disadvantage of proactive news trading is that it's difficult. A lot of people feel that it may be kind of mind-boggling to figure out whether an economic data is going to be better or worse than expected. For example, one of the things that we're going to look at today is the Australian retail sales number that came out last night. Many of you may think, how in the world could I have predicted that Australian retail sales was going to be weak and that it was going to surprise to the downside. Well, what I'm going to tell you and teach you today is that it's not as difficult as you may think. I positioned myself ahead of the Aussie dollar retail sales report, anticipating a weak release. So basically I shorted the Aussie dollar before the number came out. And there's a good reason why I did so. And, I'm going to share that with you once we get into the charts. Now, when it comes to trading news, the key is to trade pure event risk. I'm just going to start, if you don't mind, I'm just going to start a little notepad so that for those of us that are joining us a little bit later, all right, I'm just going to do it on here. So, okay. All right, here we go. So when it comes to trading news, what we want to do is we want to trade only pure event risk. So if you see here, we trade only pure event risk. So what that means is that we avoid the following. We do not trade non-farm payrolls. The reason why we do not trade non-farm payrolls is because when you take a look at my news trading strategy, you'll see that when it comes to trading news, we use relatively tight stops and relatively short limits. So if we were to trade non-farm payrolls, it tends to be a tremendous amount of volatility. And so as a result, it's very easy that you're going to get stopped out and still be right. So we don't trade non-farm payrolls because there's just very bizarre volatility. So we don't trade it proactively at all. Now, what we also don't trade is we don't trade central bank rate decisions. And the reason why we don't trade central bank rate decisions is because when it comes to central bank rate decisions, not only do you have to predict what the central bank is going to do in terms of the absolute level of the interest rate, but you also have to predict what they're going to say. So that's very difficult to trade proactively. And then finally, we don't trade anything without a number. So we don't trade the beige book report, we don't trade minutes from central bank meetings and so forth. What we do trade, however, are the following. Employment reports from any country outside of the U.S. We also trade retail sales reports, inflation reports, GDP reports, confidence reports, home sales reports, all those, U.S. home sales reports, all those are fair game. And so it does leave us with quite a bit to trade. And we always avoid trading data from Japan and Switzerland. The reason is because even though Japan and Switzerland may think that their economic data is very important, if you've ever traded currencies before or you've been doing it for a while, you'll know that Japanese and Swiss data really doesn't matter all that much to the yen or the Swiss franc. What determines the movement of dollar-yen is really U.S. data and how the market feels about U.S. dollars. And the same story is with the Swiss franc. So there is a lot for us to trade, but there's also a couple things we have to avoid. So before we go into examples, I want to show you the guidelines that I use for trading news. So the first guidelines, yes, we do trade Eurozone data. We trade basically, data from any of the major countries or regions except for Japan or Switzerland. So guidelines for trading news. Number one, we enter into a position no longer than 20 minutes before the number is released. Now, the reason why I picked 20 minutes is because I think it's a really nice sweet spot. One of the problems that a lot of people have with news trading is that spreads can widen ahead of a release. So if you're putting your trade on, right like 5 minutes before the release or 3 minutes before the release, you might get a really bad fill because spreads start to widen. So I enter the position no longer than 20 minutes before the release. Now, I don't really enter much longer than 20 minutes because when you enter longer than 20 minutes, the market's focusing on other things. And that could be, data that's released before. It could be the general sentiment of the markets. When we get to 20 minutes before the data, usually the market's focused on the economic release. So from the one hand, you get the focus of the market. From the other hand, spreads haven't quite widened to that point. And so that's why I think 20 minutes is a really nice sweet spot before a number comes out. Number two, what I like to do here is I like to use a 20 pip stop. Now we're trading the major currencies, and a 20 pip stop, tends to be the sweet spot, I believe, as well for news trading when it comes to, what I call, important economic release, but not the non-farm payrolls of the world, not the central bank rate decisions where 20 pips is really inconsequential. 20 pips is kind of, a good stop to use for, employment reports, retail sales reports of certain countries where you don't really have the spread widen too much. The third guideline that I use is that usually I will use a 20 pip first target. Now, if you ever followed any of my work, I love to use what I call a T1 and a T2, target 1 and a target 2. Now, target 1 is basically what I considered a close, easily achievable level. And then target 2 is kind of where I trail my stop. The reason why I use 2 targets is because what I find is that the reason why a lot of people are very frustrated with trading currencies is because, their targets and their risk management may be idealistic but not realistic. In the sense that, if you try to maintain this perfect, 2-to-1 risk reward, and let's say, we risk 20 pips, you'll have to try to make 40 pips in this news trade. It can be difficult to achieve because sometimes the currency doesn't even get there. So what I like to do is I like to bag my winners quickly and then try to squeeze the rest out of it only if the market gives it to me. So the way I do that is that, if a currency moves in my favor by the mouse that I risk, so in this case 20 pips, then I will move my stop to break even. So I already banked money on the first half of my position. Then I'll trail my stop on the remainder of my position, trying to get more of the move. Sometimes I'll only trade one lot and use 20 pip target, 20 pip stop if I'm busy or I can't focus on it or I've got other things going on. But if I'm, kind of free and I'm trading the news, then I'll use this T1, T2 method. So the final rule, final guideline that I have for trading news is to trail my stop. Well, first, use 20 pips first target, move stop to break even on second half of position. And then I will trail my stop using either a 2-bar low or a 20-period moving average or 3 times risk. At that point, it's really up to you to get creative because that's when you can kind of figure out, what works for your own lifestyle. If you just want to use an absolute stop and just program it into your trading station, that's fine as well. If you want to kind of keep a focus in the position, you can trail your stop, using one of these methods that I mentioned here. So let's talk about the tricks of the trade. How in the world could you predict how economic data could fare? How in the world could you position yourself ahead of a release thinking that it's going to be stronger or weaker? Well, let's start off with the Australian retail sales report. And I am going to pull up the FX Street calendar. I don't know why my screens always go back and forth, so please bear with me. Okay, so FX Street calendar. See if I can find a calendar. All right, so pull up the calendar. All right. So we had Australian retail sales report released. And as you can see here, the Australian retail sales report was very weak. And it came out 0.2% against 0.5% expected. So let me pull up my chart. And what you can see here is, let's go up to the Aussie dollar chart. And this number came out, this is a 5-minute chart that I'm showing you of the Aussie dollar. This number came out at 7:30 last night. So the number came out let me get my little cursor up and everything. The number came out basically where this candle is. So if we follow the guidelines I presented to you, we would enter into the trade 20 minutes before the release. So this is a release candle, 5, 10, 15, 20. So we would enter the trade at 101, approximately 30. We use a 20 pip stop. So our stop would be at 101.50. So there was, as you can see, there was no chance that the Australian dollar was going to go there. And because I thought the number was going to be weak, what I did was basically I put a short position in the Australian dollar 20 minutes before the release with a 20 pip stop, 20 pip target. Now, before we actually look at the trade, you may ask me, how in the world could you have predicted that Australian retail sales was going to be weak? Well, let me introduce you to the beauty of PMI reports. PMI reports from countries around the world present to us a tremendous amount of information. And last week, we had a report from Australia, which is a service sector PMI report. And this report has a little subcomponent in there called sales. So all this information is really easy to find. You just type in, let me just go to Google. You just type in Australian PSI, which is basically their equivalent of their PMI report. And you just type in Australian PSI. I just click on the first one. This information is publicly available. It's presented on the FX Street Calendar. I write about it all the time. You can see here, on February 3rd, they released a PSI report. So, on their PSI report, here, let me try to redo this. Alright, so hopefully you can see this now. One second. So right here, we have the PSI report on February 3rd. And if you take a look at this report, let's see if we can find their PR release. It's on their homepage. So if you just go to the Australian AI Group report, and you see down here they have the service sector report. So the service sector report, if you click on the PDF file, it will launch a fuller report and you can see all the details. But if you look at this report, it says activity contracted most notably during January in retail trade. And the PSI report has a little subcomponent called sales. And the sales index that month actually declined from 46.9 to basically 45.4. So since the subcomponents of the index declined from 46.9 to 45.4, and this industry group clearly said that retail trade, which is another word for retail sales, notably contracted in the month of January, that told me that the odds favor a weaker Australian retail sales report. Because this indicator has the word sales in it. If you open up the PDF, and I encourage you to do so, I just don't have my Acrobat loaded into my Windows environment on my Mac here. But if you take a look at that, I'll tell you that the sales components of the PSI report declined. Retail sales, the same word, sales in it, and that should tell you, or at least it told me, that retail sales are going to surprise to the downside. So that's why I went short. If you take a look at my chart right now, I've just pulled up the Aussie dollar chart. I went short the Aussie dollar at 7:10 p.m. and that was at around 101.30. And within 5 minutes of the economic indicator being released, the Aussie dollar fell to a low of 1.010, I think 05 or so, or even less, 1.0102 or 3. So that shows you how the number affected the currency pair and how it's instant gratification in the sense that, I shorted the Aussie dollar and then it collapsed and the trade was resolved relatively quickly. So let's look at another example. Another recent example in terms of economic data that was released was actually last Thursday. So let's go back to the FX Street calendar. And last Thursday we had the UK services number released, and let me pull up the live calendar before I get into your questions. So Abdu, the number is, in terms of the retail sales report, I don't know why we're talking about the jobs report right now, but right now we're talking about the retail sales report, and we'll get to the jobs report for next week later. In terms of Paul, alright, let me refresh this. Okay, in terms of Paul, your question, if you trade news released outside of the U.S., do you always choose then the currency pair related to the U.S.? Yes, I always trade the major. And then Latin trader is a typical time frame for retail sales reports effects for FX to dilute. Typically with these proactive trades, we're not in the trades for very long, usually half an hour is the maximum. And then in terms of Australian employment numbers, we'll get to that when we look at next week's releases. So anyway, last week we had the UK service sector report, and let me just pull that up real quick. It was actually on Thursday, and so let's filter this. Okay, so on Thursday we had the UK, let's find the UK service sector PMI report. So the number came out really strong. It came out on Thursday at 4:30 a.m. New York time. Let's take a look at the pound dollar. This is a 5-minute chart of the pound dollar. So the Thursday was the 3rd, so I'm just going to scroll back in my chart to show you the 3rd. Okay, so 4:30 a.m. New York time. So this is the news candle right here. So as per my guidelines for trading news, I would have entered into this position basically 20 minutes before the release. So let me just make sure all of you can see this alongside me. Alright, so in terms of the UK service sector PMI report, 20 minutes before the release, 5, 10, 15, 20, we would have entered here at around 162.10 maybe. And this is what I want to point out to you. When we're trading news, right before the economic data is released, you can see that there's consolidation. And this is why I like the 20 minutes, because right before the news release is a little bit of consolidation. It gives you a very clear level to put your stops and limits, because 20 pips below our entry, is usually a fairly significant level pre-news release. And then, that's the market's focused on the number because that is what the consolidation shows you. So we enter into the trade 20 minutes before we release. We put our trade on maybe at 162.10. Does fall a little bit, but only by maybe 5 or 6 pips. When the number comes out, it comes out strong. It skyrockets and it hits our 20 pip target easily, and you could have trailed your stop, in order to capture more of the move. So the next logical question that you should ask me is, how in the world, here, let me show you this chart again. Alright, so this is the chart. Does anyone see this chart right here now? Please let me know if you see my chart. Yes? No? Okay, wonderful. So I was saying that this is the consolidation right before the news release. And that's why, typically right before news release you have consolidation, and that's really the beautiful thing that you want to see. And then when the number comes out, you get the explosion. So, the next logical question you should ask me is, Kathy, how in the world could you have predicted that UK service sector PMI was going to be strong? Well, my answer to you is a couple of days before the UK PMI services number was released, manufacturing sector PMI number was released. This happens often, even in the U.S. Before the U.S. service sector ISM was released, the U.S. manufacturing ISM is released. So if we go back to the FX Street calendar, and for those of you that were actually trading, you may have remembered this. Earlier this week, and you can see that right here, where I'm pointing to, the manufacturing sector PMI showed you that the index went from 58.7 to 62. So I believe that was, a record high in the UK manufacturing PMI index. So right here, this UK manufacturing PMI index, it came out a day before the service sector PMI release. It was very, very strong. So since it was very, very strong, the odds favor a stronger service sector number as well. So at this point, you would take an educated guess that the number was going to be strong. That's what I did. And I positioned ahead of the UK service sector number by buying pound dollars, anticipating that the strength that we saw in manufacturing would be reflected in services. We get this a lot. For example, last week in Australia, we had the Australian manufacturing data released in terms of the manufacturing PMI number. And if you remember, for those of you that were watching the economic calendar, the manufacturing report was basically pretty soft. Manufacturing PMI deteriorated, it remains contractionary, and then services came out soft. The correlation is never 100%. And, if someone told you that the correlation is 100%, they basically be lying to you. The point is that we're taking, high statistically significant scenarios with a high probability that the strength in manufacturing would translate into strength in services. And usually, in my experience, it probably has about 70% accuracy. So that was the UK services example, and there's just one more that I want to show you before we look at next week's economic calendar and what we could fare. Another good one was last week on Wednesday, we had the New Zealand employment report released. So let me just find this on this calendar here. The New Zealand employment report was released on the 3rd. Let me see if I can find this on the FX Street calendar. Here, New Zealand employment report. And as you can see here, if you remember, the New Zealand employment numbers were very, very weak. The unemployment rate rose to 6.8%, and we just had really, really weak employment numbers. So let's take a look at the chart. Let me show you the price action. That was on the 3rd, and the New Zealand employment number was released at 4:45. So I'm going to pull up the Kiwi dollar chart. Let me refresh my camera so you can follow along with me. Okay, so I'm going to pull up the Kiwi dollar chart. That is the chart of the Kiwi dollar. And let's go to February 2nd of last week when we had the employment report released. So I'm just going to scroll back real quick. Okay, so this is February 2nd, and this is the New Zealand employment report. As you can see, this is a candle when the number came out. And once again, I want to show you the beauty of this kind of range trading consolidation that you usually get before the numbers release. So we're entering 20 minutes before the numbers release. We decided to short New Zealand dollars because our leading indicator for New Zealand employment tells us that the number should be weaker. So nice quiet trading before the numbers release, consolidation. We're entering long enough that spreads haven't quite widened. So in this case, this is the 4:45 candle. That's when the numbers release. So we enter into the position at 4:25. So 5, 10, 15, 20. So we enter basically here at 77.80. So our stop is at 78 because it's 20 pips above. As you can see, it doesn't even get anywhere near our stop. Just quietly consolidates before the numbers release. Number comes out. It comes out weak as you took a look at that FX Street calendar, and bang, the New Zealand dollar falls basically 80 pips within the first 5 to 10 minutes. So therefore, obviously, your target is hit relatively quickly because the move is so fast. So you will ask me, how in the world could you have predicted that the New Zealand employment number was going to be weak? Well, a couple of things. Let's take a look at this. First of all, I started off and I talked about how PMI numbers tell us a wealth of information. And so, New Zealand also releases PMI numbers. So let me refresh my camera. Okay, so let's just type in New Zealand PMI number. And if you just Google it, I mean, this information is free, it's readily available. You'll get this, the Index Business New Zealand PMI. Hopefully you can see my chart, otherwise I'm just going to refresh it once the page loads. Okay, so right now, I just Googled New Zealand PMI, I clicked on the Business PMI Index, and this is what you get. The latest release, this is already the Business PMI Index. Let's click on this. Okay, so it's freely available information. They launched for me the Excel file. I click down here, and this is actually the December reading. Let's see if we can get a more recent reading here. All right, let's see 1 second. Let me see if my Excel file will launch. All right, anyway, I can't really launch it there, but we'll just Google it because it's very easy to find if we Google it. So I'm Googling New Zealand's employment, and we just look in news section. Let's see if we can find it. So it would be easy to find if you could launch the PDF file, but because my PDF file, okay, here we go. So this is the Excel file. I apologize. When you're running a Mac on when you're running an environment of a Mac on using Windows, it's always a little buggy. But what I can show you is that if you clicked on this, what you'll see is that Excel file that I just launched. And if you took a look at the Excel file, you'll see that the employment component of that report actually deteriorated in the month of December. So, see if we can get that here. I think this is it. So, right here. So the employment is column D. And if you remember, the New Zealand, and let me actually freeze this so you can see this carefully. Freeze pane. Okay. So the New Zealand employment report was for the fourth quarter. And you can see that the employment components of the Business PMI Index, the fourth quarter, the numbers were all weaker than the third quarter. The third quarter numbers were 51, 51.8, 53.5. The fourth quarter was 49.5, 49, 49.4. So that told me that the employment number from New Zealand was probably going to be weak because the employment component of the PMI report deteriorated in the third quarter. And that's why I positioned myself ahead of the New Zealand employment report by shorting it 20 minutes before the release, taking an educated guess that it was going to be weak and based upon these leading indicators. And lo and behold, if you take a look once again back at this price action here, you'll see that shorting it 20 minutes before the release and bang, it declined. So that's why, at first glance, trading news proactively may seem a little confusing, and some of you may still think, I have no clue how I'm going to do this. But if you apply a little bit of logical thought to it, and you take advantage of some of these reports that are released before those numbers, it can help you trade much more effectively. It can help you position in front of these releases. Take, in this case, what could be a nice, solid, educated guess on where the New Zealand employment report is going to fare. So before we look at, this week's numbers, I want to kind of go back to some of these questions that all of you had. So once again, with the Lien, the correlations are not 100%. But, like I said, for me, they work pretty well, probably around the 7% accuracy rate. And that's really what I like to see because of what I call high probability trading. Boyke, you asked, can you straddle enter trades on both sides? You could, but sometimes you have a little bit of initial volatility, but that also could be, something that you do. And, but I prefer to just kind of position it in one direction so I don't have two positions exposed, that could potentially be stopped out if the number's too volatile. And then, Treviso, I already told you, in my experience, it has about, 70% accuracy. Stevia, I'm a news trader too, but my broker gives widened spreads and slippage due to a loss, stop loss. Typically, when we put our trade on 20 minutes before the release, the spreads are still relatively tight. It can widen a little bit before the numbers release. The 20 pips would be a very significant widening of spread. And since we're trading the majors, you don't really see that often. If you're trading a cross, you may see it much more often. So let's take a look at this week's calendar to get a sense of what could transpire. And this is actually what I do on a weekly basis for myself and our subs at BK Forex Advisors, which is, let me show you this calendar. Okay. So right now, you can just see this Excel file that I prepare for myself on Friday. So this calendar is prepared on Fridays for the upcoming week. And basically, I prepare it when I have, I'm kind of peaceful, I have clarity in terms of my mind, I'm not distracted by the price action, I'm not distracted by the markets are moving. So I create this calendar that lets me plan my trading week for news trading. So what this means is that every single day, I know exactly what time I plan to trade, what events risk I plan to trade, and then also what direction I plan to trade it in, whether I'm bearish number or bullish number, and why. So you can see that, this calendar, on Sunday we had the Australian retail sales report released, and, for our subscribers, I wrote about how we would be shorting the Australian dollar because of sales components. Let me just pull the Excel. So the sales components of the retail PMI index declined. Now, tomorrow we've got the German industrial production numbers, and I also explained that I'm going to be looking to sell the euro dollar in anticipation of the German industrial production numbers because factory orders declined. There was a sharp rise in manufacturing PMI, but the details of the report, and you could Google this, showed me that new orders and export orders were not really so great. So even though the headline release was kind of strong, new orders and export orders weren't really that strong, and so therefore I'm going to be bearish that number. And in terms of the German trade and current account numbers, I'm going to update those numbers after we get the industrial production numbers. Other things I'm going to be trading this week include the UK trade balance. Green and number 1 over here means I'm very confident about this. I'm very confident that we're probably going to have a strong UK trade number. And the reason I provide here is because manufacturing PMI hit a record high. We also saw new orders and export orders increase significantly. Now, if you think about it, if you have a little subline that's called export orders, it's most likely going to be related to trade. And if export orders grew at a very significant rate, there's a very good chance the trade activity improves significantly as well. Because all of these, they share the same name for a reason. And that's why, at 4:10, the numbers released at 4:30 New York time, I'm going to be positioning to go long pound dollars ahead of the UK trade balance. As for Australian employment numbers, we look at the 3 PMI reports that come from Australia, the Australian PMI service sector report, the employment report, the manufacturing report, and the construction report. And as I wrote here, the employment component of the service PMI report actually declined. That tells me that, maybe the service sector did not really add jobs in the month of January. Manufacturing, on the other hand, saw a very, very immaterial increase in employment. Construction sector also saw a deterioration. Now, given the weakness of the December print, it was only 2.3 thousand, I would actually be bullish the Australian dollar and go long the Australian dollar ahead of the employment number, even though the service sector number is kind of weak, construction sector is kind of weak. The reason why I don't do this is because the forecast is really high. The market's already looking for 20,000 job growth, which could be very difficult to beat. If the employment component of services, manufacturing, and construction all improve, I would be very confident to take a long Aussie dollar trade before the number, even though the forecast is high. But because we have some mixed indicators and the forecast is high, we're going to pass in this trade. On Thursday, we've got the UK industrial production numbers released, and I also think the number is going to be very, very strong. I've got number 1 confidence here, and because manufacturing PMI hit a record high, so that's I'm going to be going long the pound dollars ahead of the UK UK industrial production report. We don't trade rate decisions, as I noted to you in the very beginning of the rate decisions, in the very beginning of this presentation. So we'll be passing on the BOE rate decision trade. And also, when the BOE does not change interest rates, they really say nothing. So it will really probably be a non-event for the pound dollar anyway. The more interesting trade on Thursday will be the UK industrial production report. On Friday, I'm also very confident about the UK producer price report because we had very sharp increases in input and output prices for both service and manufacturing. So the PMI reports from the UK told me that prices increased significantly in the month of January. So, like I said, the PMI reports tell us so much information, and the market's literally looking for a slightly softer release. Those are the best ones, where the market's expectations are completely misaligned. And so I'll be looking to go long the pound dollar at 4:10 a.m., anticipating a stronger UK PPI report. Later on that day, we've got the Canadian trade balance report. I'm looking to short Canadian dollars ahead of that number, and the reason I provide here is because we had a sharp drop in IV PMI. And like I said earlier, these are manufacturing sector reports. And so usually trade activity is correlated with the manufacturing sector. So since, there was a very sharp decline in manufacturing sector activity, then you would think that trade activity probably deteriorated as well, particularly since the number was so weak. But I only have a level 2 confidence in here because we did have a small rise in inventory and a small increase in supply delivery. Nonetheless, at 8:10 a.m. New York time, I'll be looking to short the Canadian dollar and go long the U.S. dollar in anticipation of a weak release. I'll get to all your questions in a second. And then finally, the last number that I have that I'll be trading on Friday is the U.S. trade balance. And once again, we're looking at the manufacturing ISM number. Manufacturing ISM in the U.S. was very, very strong. And so the market's looking for the trade balance to deteriorate, but I'm going to be going long U.S. dollars ahead of this release, anticipating an improvement in trade activity because of an improvement in manufacturing ISM at 8:10 a.m. And the last one that I'll be updating is actually the University Confidence number. Tomorrow we get the IBD, Economic Optimism Index, and that has a very strong correlation with the University of Michigan Consumer Confidence Survey. So if that number is strong, I'm going to be changing this to be a bullish dollar trade and a long dollar yen trade ahead of that release as well. If it's going to be weak, I'll be changing it to bearish. So that's how I kind of set up my economic calendar. And so I know exactly every single day what time I plan to trade, what I plan to trade, and so there's no ambiguity there. And it really gives me a nice clear-cut trading plan to have for the trading day. So going back to your questions, let me work backwards here. How can we know what type of reports are related to which other similar reports? Jeff, this comes from experience, but just a little bit of common sense would be enough. For example, one of the ones I really love to trade is German producer prices. A couple days before the German producer price report comes out, we have German wholesale prices. Think about it. Producer prices and wholesale prices. Producer and wholesale is pretty much the same thing. And believe it or not, they have a very, very strong correlation. Same thing with Canadian retail sales. Last month, I went long the Canadian dollar ahead of the retail sales report. And the reason is because the wholesale sales report was very strong. Both of these indicators have the word sales in them. So it doesn't take much to, make that connection and realize that wholesale sales has some sort of correlation with retail sales. Producer prices usually has a decent correlation with consumer prices because they're both inflationary measures. Once again, this is not 100%, but it's much more often than you would think. Do you use limit orders for entry? No, I enter at market viva 20 minutes before the release. We already took a look at the Australian employment report. Can you trade these numbers using XX futures? You could, but I don't, JJ. I can't really give you that too much insight into that because I trade spot. Christy, what do you think about using a trailing stop for the second half position to cash more pips? That's what I do. In the beginning of this presentation, I talked about how I use a trailing stop in order to capture more of the move because as you saw from some of the examples I showed you earlier, the move can be very, very significant. Sometimes very little, sometimes it's a lot, but I do use trailing stops. But for simplicity purposes, I was just talking about, 20 pip target, 20 pip stop. So we put an order limit before the news. That's really up to you. A lot of times, if you put an order before the news, brokers may not necessarily fill you at the price that you want because, when the number comes out, the move is very quick, and so you may not get your entry limit filled. But if you have an exit limit and you're right and it moves, in your direction, they're probably going to fill you at your price and not the eventual price that it moves at, because that would be much more advantageous for them to do so. Is this report given to clients at the beginning of each week? Yes, it is given to BK clients on Friday for the coming week. You also explain at BK Forex Advisors where you look at the numbers and what you're looking at. Yes, that's where our reviews come from in the explanation. So, and also our subscribers can ask us any questions anytime. This is not the only service that we provide to our clients. We also give trading signals, actually, with, entry and exit levels. What reports do you see prior to the news? That's what is explained in the Our View section of this Excel file. Hi, Kathy. If the proactive trade is stopped out, do you get even with a reactive setup? I do, and that's really what Boris will be talking about on Monday, which is reactive trading. So I'm not going to get into that because that's really his realm, and he's going to be talking about that. How do you enter if you're sleeping? You don't, Boyke. The ones I showed you were predominantly trades in my time zone, which is like the Australian retail sales trade, the New Zealand employment trade, the and things like that. Boris trades more the European and the U.S. releases. Really depends on what ideas you're on. This webinar was recorded, and we do publish this calendar. Let's see what else kind of questions that we have. Can we scroll down the calendar? Yes. Why 20 pip stop? I just think it's a sweet spot. If you listen back to the beginning of the presentation, I really go into more detail about why I like the 20 pip stop. What if your stop is hit before the release? If it's hit before the release, I usually don't get in, because that means that market's thinking about something else. So if I get stopped, I moved on to the next trade. So, just in case you want a little bit of more information on this, you can look at what we do. You can look at our website, bkforexadvisors.com. This is just one of the things that we offer clients. And then for those of you that have heard of our service before, and are just kind of looking for more information and any special deals, I am offering a special to people who attend this webinar. It's going to be, I'm going to pull up the Excel file first so you can look at this. It's going to be just for webinar attendees in case you're interested in trying out our service. And then any tips to avoid the freezing experience of DealBook 360? To be honest, Annie's, I trade on the DealBook web platform. I don't have that experience at all. The DealBook prices are really good, and usually, they don't really widen the spreads ahead of the releases. So I use DealBook web, and I don't have that experience at all. But what I was saying is that Boris next week, for those of you that are still currently, think this is really interesting, but think to yourself, I couldn't do this myself, then what you could do is either take a look at the services that we offer at BK Forex Advisors, or you could attend Boris' session on Monday. I think it's Monday of next week, and he'll teach you how to trade reactively, which means that you get into the trade after the numbers come out. The benefits of reactive trading is that there's no guessing. You don't need to guess whether the number is going to be good or bad. The disadvantage of it, of course, is that usually you have to be very quick with the trading, because when the number comes out, a lot of times the move has already happened. So you just got to be swift with it, and you can't. You usually may not get as much pippage because sometimes the move has already happened. So there are both pros and cons to proactive and reactive trading. The biggest con of proactive trading is that it's difficult. We do the work for our subscribers at BK Forex Advisors, but feel free to attend Boris' session because you could learn a lot more from that one as well. So thank you so much for participating in this session with me, and it's been great talking to you. The $9.99 is still valid. We're doing a special offer just for the FX Street webinars. And I do prefer proactive trading much more than anything else. And if you have any other questions, feel free to email me. If you go to BK Forex Advisors, what you'll see is that there's a Contact Us button, and Boris and I answer this box personally. So, feel free to just kind of, email me or email him with any questions, and be more than happy to, share that information with you. If you are interested in getting this week's Excel spreadsheet, I'd be more than happy to send that to you. Just just, contact me through that contact box, put in your correct email address, and then please try to do so by the end of today, and then I'll send it out today, all right, just for this week. So thank you so much, and hopefully I'll be back to speak to y'all soon.